Hi traders, welcome to another episode on the trades we missed last week. So without further ado, let's move on to the trades we missed last week. So we are on our 15-minute time frame here, and you can see a fair value gap. This was on Thursday, so let's highlight this fair value gap well so we can see how price reacts from it. So remember, our fair value gap from here to the low that created that fair value gap. So let's put it this way, so we have it here like this. So you can see how price reacted from this fair value gap on Thursday stroke Friday. So this is Friday, and you can see a break of market structure here. After price tapped this fair value gap, then there's a break of market structure, and we have a fair value gap for our entry. So this is how we'd enter this trade. Now on a 5-minute time frame, we'll see how we can enter this trade with a more defined fair value gap. So like this, let's go to our 5 minutes time frame to see how we would have taken this sell on Friday. Now this Friday's trade was explained on our last episode, but for clearer explanation, let's go to our 5-minute time frame here. Now we are on our 5-minute time frame, and you can see a fair value gap here. So this is where we would want to put our entry. So you see how price comes to this fair value gap and went all the way down. So we'll put our entry here for a short position at the start of this fair value gap, and our stop loss right above this previous high that created this fair value gap. And don't forget, we have a fair value gap price had once tapped into right here. So see price tapping again on this fair value gap. So we'll put our take profits right below any previous low, or if possible beside any fair value gap, just like so. There's a fair value gap here we highlighted on our 15-minute time frame, and you can see on our 15-minute time frame there's a fair value gap here. So we put our take profit there, and that is giving you a risk reward of 3.55. So the next one is our first trade for Monday. So our Monday's trade, after price taps into this 15-minute fair value gap, we anticipate a break of market structure and a fair value gap for our entry on our 5-minute time frame. Now you can see there is a break of market structure here. There's a break of market structure here, and our entry should be here. So let's put it like this, long position. You can see our entry should be here, this fair value gap. We stretch it here. You see how the price does not take you out because this fair value gap here is being respected. So this is our break of market structure here. You can see how price rallied above this previous high here, but this was not the trade I was cited because this was Friday's close. So the next trade we're anticipating was Monday's opening. So let's take this one out, and you see Monday's opening. This is our Monday's opening. So we have a breaker here, and we still have our fair value gap here. So this is a fair value gap. This one here is our fair value gap. As you can see, this is a fair value gap being highlighted here. You know that price had once tapped into this 15 minutes fair value gap, so we anticipate a break of market structure right here. So any fair value gap you cite is your entry. So let's enter this way for a long position. Tap into this fair value gap, and your low is your stop loss right here. See how price taps into this fair value gap right here, and your take profit should be any previous high that's suitable for you. So we have a take profit here. This high is our take profit, or better say you can use this high. So let's try using this high, this one here. So you see how price rallied to tap this high right there. So before price got to that high, you can see a series of setups being shown here. So let's move on to our number 2 trade. So our number 2 trade is right at the corner here. We have a fair value gap right here. So this is a fair value gap right here. You can see it here, a fair value gap here. So we take this as your point of interest, which is a supply zone. A supply zone, and you alight your fair value gap all the way to the left right here. You anticipate price tapping into that fair value gap and create for you a break of market structure and another fair value gap. As you can see, this is your break of market structure here. Price taps into this fair value gap. This is your supply zone. Breaks structure. Price breaks the structure, taps into this fair value gap, and you have your entry. So you have your short position here. You can put it here for your entry, and your stop loss right above this previous high here. Your take profit should be any given fair value gap or a reasonable low right there. So we have a fair value gap here. Right behind this we have a breaker, so we use this as our take profit. You can see a fair value gap here on our 5-minute time frame. So price might tap into this fair value gap and retreat to the upside. We have a profit of 2.75 risk to reward ratio right there. So the next one is our trade number 3. You can cite our trade number 3 here by first looking for a fair value gap. Now we have a fair value gap here. We alight this fair value gap just like the rest. After alighting this fair value gap, you wait for a break of market structure. As you can see, we have a break of market structure here. The next thing is to look for a fair value gap. Now we can see a fair value gap here. I hope you can see this fair value gap here. Then this should be your reason for entry. So this is it, and you put your long position right here, and your stop loss right below this low that created that fair value gap, and you take your profit all the way to the next fair value gap. On the high time frame, you can see a fair value gap here. So we have a profit of 4.45 risk to reward ratio, and you can see a re-entry right here because price also broke a structure here. You can see how price broke this structure, and we have a fair value gap cited here. Price had once tapped into a fair value gap here, so we have a break of market structure and we also have a fair value gap. So this is your entry. So let's take our long position and put it right here. So we anticipate that price should tap into this fair value gap. See how price taps into this fair value gap. Let's put this previous trade to the left here. See how price taps into this fair value gap here and rally to the upside. We still take that profit. We still take that profit to the same risk to reward ratio, and we have a profit of 7.31 risk to reward ratio. So price almost takes us out here, but still rally to the upside. The next trade on our list is our trade number 4. We have a fair value gap cited here and being respected right here. The next thing we look for is, as usual, our break of market structure, which is here, and a fair value gap. Now on a lower time frame, like 3 minutes time frame, you can see a smaller fair value gap price might want to respect, giving you a higher risk to reward ratio. So this is what we would look for our entry. Our entry should be a short position of risk to reward ratio should give you about 3.65 risk to reward ratio. So giving you this previous low right here. So you want to use this previous low as your take profits. And you see how price rallied past that take profit up to this spot here before taking you out. So the next trade is number 5 trade. Our trade number 5 goes like this. We have a bullish trade right here. You see how price taps into this fair value gap here. Let me highlight this fair value gap for you. Price taps into this fair value gap here. The next thing we'd look for is, as usual, our break of market structure here. We have a break of market structure here, and our fair value gap. We have a fair value gap down below here, and we also have a fair value gap here. You see how price respected the first fair value gap here. So for you not to miss this trade, you might want to go for this one here, because price might not reach this fair value gap here. I might just use this fair value gap right here. So either ways, you just use the fair value gap like this. For our long position, we use this previous low as our stop loss, and our entry is this fair value gap. Our take profit should be a previous high right here. So you can see how I've highlighted the previous highs, so we don't have to go back in time to look for our previous highs. So we have a profit of 3.74 risk to reward ratio. For that, our bullish trade. That was our trade number 5. And moving on, we have a demand area. This is our demand area. You can see this fair value gap right here is our demand area. Highlighting it to the left, the first thing we would look for is a break of market structure right here and a fair value gap. As you can see, we have a break of market structure and a fair value gap highlighted like so right here, and we have our number 6 trade just like this. Our long position here, our stop loss should be below this previous low that created this fair value gap, and our take profit should be this previous high here. So this is our take profit, giving you a profit of 3.09 risk to reward ratio. The next on our list is our trade number 7. So our trade number 7 goes like this. We have a fair value gap here. Let me highlight this one for you to see. Let me take this one out. So we have a fair value gap here, and you can see this fair value gap is coming from a previous fair value gap right here. Normally we would have taken this trade, but because this trade did not break any market structure right here, so we did not take this trade. If price comes back to this fair value gap, there's no reason to buy because price did not break any market structure right here. So we would still wait until one market structure has been broken, that's a previous high has been broken. So we highlight this one right here. This is our fair value gap. Now price tapping into this fair value gap many times. So after multiple tappings, you can see how price creates a break of market structure. Price breaks structure here and also gives you a fair value gap right here. So this should be your entry. So let's put our entry. Our long position should be at this fair value gap right here, and our stop loss right below this low that created that fair value gap. Our take profit can be here, this previous high here. Let me put it like this. So our take profit can be this previous high, giving you a risk reward of 1.88, or you can extend it to this previous high here. Price giving you a risk reward of 3.07 for this trade number 7. The next trade is trade number 8, and we have it right here. So we have a fair value gap price respect set. We have a fair value gap that's been respected here, and we have a break of market structure here. We have a break of market structure here. The next thing is to find a fair value gap. Is a fair value gap? Do we have a fair value gap here? Yes, we do have a fair value gap, and this is it. We have a fair value gap here between these two candles here. We have a fair value gap, and this is our entry for a short position. So we put our position here, and our stop loss should be above that high that tapped into the first fair value gap, and you can use this as our take profit. This previous low here should be our take profit, giving you a risk to reward of 2.72 risk to reward ratio. So we have our number 8 trade. Moving forward, you can see how our fair value gaps are being highlighted here. This is a fair value gap. Price taps into this fair value gap on Friday, and let me take this one out, but the price did not break this previous high. So if price had broken this previous high, giving you a break of market structure, would have used this fair value gap as our entry, but still price respected this fair value gap. So this is our point of interest now. This is our fair value gap we would be looking at, and price tapped into this fair value gap right here. After price tapped into this fair value gap, we can now see a break of market structure, indicating that any fair value gap that has been created here is going to be used as our entry for a bullish move. Assuming there is no manipulation in the market, this would be a bullish move. So this is how I would enter this trade, just like this. This is a projection for Monday's trade. You can use this as your take profit. Or you can use this one as your take profit, giving you a risk reward of 5.14 or a risk reward of 2.6. But we can also see a roadblock right here, because we have a fair value gap price is seeming to respect right here. You can see this fair value gap here. Price just respected this fair value gap, and so it can also mean you'll be expecting a bearish move to the downside. But we have a strong bullish trade here, assuming there is no manipulation in the markets prior to Monday's opening. So guys, see you on the next episode on the trades we missed, and go back to your charts, back tests. May the pips be with you. Peace.